Hey everybody, Brian Foote here. Welcome back. What is a multi-bagger stock, right? When you hear me talk about 10 bagger, it means a stock that goes up tenfold. So you buy a stock for $1, it goes to $10, or in the real world, you buy something for 10 or 15, and it goes to 100 or $150. That's a 10 bagger. There are investors out there who have made millions investing in smaller unknown stocks before they skyrocketed, right? That's the holy grail that you've probably heard people at cocktail parties and friends talk about their famous multi-baggers. There certainly is, across my career, and across the careers of many, opportunities that have presented themselves to be 50 and 100 baggers. You can look at the investments that Warren Buffett made over the years, and not just. I mean, over the course of just the past 25 years, you've seen some of the famous companies like Apple and Adobe, certainly Nvidia, and others as famous multi-baggers, if not 100-baggers. The difficulty, the difficulty in identifying these things is something we ought to spend a lot of time on. This is not just a simple 3-minute video. We could spend an entire course, which I plan to do, discussing the difficulty in identifying multi-bagger stocks early on. There are risks associated with such investments. It's never too clear what is going to be the multi-bagger of your lifetime. For instance, I bring up in my book Starbucks as a stock that if you had 30 years ago, 1994, bought Starbucks shares, you would have made over 200 times your money, I think is the last count, right? And was it that evident then? I was working at a famous brokerage firm at that point, and I was one of the young guys in the firm. I was just about 20 years old at that point. And some of the smartest and most experienced stockbrokers, stock salesmen, were poo-pooing the idea of owning Starbucks stock. Part of it was because this was untested in New York, and that was their perspective. Part of it was because it seemed to them like a fad, that many people look at something that's new with a massive competitive landscape, right? That was basically every coffee shop in New York City, and the pricing was totally different, right? If you recall, those of us who were around at that point, it was only 30 years ago, the alternatives were coffee off the street or coffee from your local diner or bodega in Manhattan, and that coffee was viewed as a commodity. The premium coffee market hadn't really taken off, but therefore conventional wisdom was who's going to pay this kind of money or go to visit a Starbucks store. Mr. Schultz, Howard Schultz, and the team at Starbucks got it right, and those brokers turned us away from what turned out to be a 200 bagger. And there's been volatility, etc. But people could have just as easily invested in other nascent competitors at that point, right? There's always a Me Too, and there's always a competitor out there that one would think could be a better thing. For instance, in the late 90s, it was pretty clear to almost everyone, and almost everyone was clearly wrong, that Apple was going to be a novelty, both as a company, as a stock, that were going to go away. There had been management turmoil, there had been management changes. Steve Jobs came back, and again, I discuss this in my book, but that stock has been well over 100 baggers since 2000, when, again, a seasoned, experienced broker and the most knowledgeable people on the planet were saying that Steve Jobs could not resurrect Apple, that Apple was a nice novelty, and it was to paraphrase one institutional salesman on Wall Street that I knew, it was a company made for artists. Boy, were they wrong. Right now, there are companies that I would argue are that could be multi-bagger or 100-bagger opportunities. They are out there. They're lurking among the sub $100 million and the sub $200 million market cap range. They've got lots of competition. They've got untested markets. And these are things that if you really do the work, and you will still come up lacking some clear answers about whether or not they will be 100-baggers or merely okay investments or even bankruptcies. So the conclusion here is that the importance of early identification is clear, right? You need to know the ingredients that will make a future Apple or a future Starbucks or a future McDonald's. But you also have to consider the fact that other people are looking for this. They're going to be among companies that look like you're overpaying, often for a while. There will be, as a function of small capitalization and volatile earnings, a pretty volatile situation. But I'd like you to consider the fact that that's the quest, right? And that's the quest that we're on. And future multi-baggers definitely have their place among other investments in a portfolio for those of you who can handle the risk and tolerate the volatility. And I'd love you to join us in our group, as well as subscribe here. Thanks for joining.